Good evening, everybody. That was a 1960 Lincoln Premier. Probably about the biggest car I've ever driven. All right. Welcome, everybody. It is December 17th. Doesn't seem possible. It just seems like Christmas was here a couple months ago. All right. I guess we're ready to go. Oops, hang on for one more second. All right. Had a good day in the market. And as we can see, I think we can see, uh, we're in a nice, good uptrend, obviously. And it might still be a slow, steady uptrend. I'm trying to see where the next potential target would be. Would anticipate we could still get up into this range, which means there'd be another 2 weeks going all the way to the end of the year. A couple months ago, it's Texas time, is right. All right, so nice strong day. Now, this was kind of anticipated because we had a nice strong market. We have never come back below the T line. We came up through the 50, did a Morningstar signal. We bounced just exactly on the 50-day moving average on Friday. So I had two opportunities, which made it very simple on the open this morning. If it was lower, it means they were probably pulling it back. We were stuck in this downtrending channel. If they took a positive, that means we were still in this uptrending channel, and that the 50-day moving average was probably going to act as support. The S&P kind of confirmed that also. On Friday, it did a doji right back to the 50 and came back up again. If it opened positive today, we know the simple rule of a doji. It's going to move in the direction of how they open it. So that made the trading very simple today, which meant if you were trying to figure out what to do long or short, a positive open today gave us that impression or that information immediately that we still wanted to stay long, that they were not coming back down through the 50. NASDAQ, doji right on a support level here, positive trading, back up. We might be caught in a trend channel, but as long as this trend channel keeps moving us sideways, that gives us a opportunity. Not an opportunity. It gives the stocks that we're watching an opportunity to move the way they're supposed to. I could take a sideways market all day long because all that means is that the investor sentiment that is built into individual stock charts aren't going to change dramatically based upon all of a sudden them pulling the bottom out of the market. Even in a flat market, your strong stocks are going to act strong, your weak stocks are going to act weak, and fortunately we've got the capabilities of seeing which direction each one is going. With that doji on the Dow, would you have placed your stop below the open of the doji or the 50-day moving average, or what else? That doji on the Dow. Tony, which one? We got one right here. We got one right here. We got a little bounce here. The last one right here. It was very simple. We're back here on the 50. If it opened weaker and traded down through the 50, that told us one of these are going to be the next target. However, if this was the next target, that put us right back into this downtrending channel that we weren't in a very strong uptrend. The fact that they came up through the 50, pulled back to the 50, which is the top resistance, now the top support level, and taking it back up, that tells us our uptrend is more likely not only to be an uptrend, but a more strong uptrend. All right, let's take a gander real quick at some of the other things. Gold is not doing anything that would impress me one way or the other. Getting a slow rounding top and kind of in a slow downtrend. I wouldn't be trading gold or silver right now, other than if you wanted to go on the short side. I would suspect silver's coming back here to the 200-day moving average. Why? Because there's a kicker signal right here that tells us there's price more downside. If you were trading silver, it would be very simple. If they open it lower tomorrow after a doji, they're still taking it down. But if you bought on the open today, where would you have placed your stop? Oh, we bought on the open today. With it opening and moving positive, where should it not trade? It probably shouldn't come back down through the open. If it did, you've got kind of a shooting star doji setting up, and it's telling us they aren't taking it up, they're still taking it down. So if I was buying today and then the market came back down through the open, I'd look at what my positions were doing. If they weren't showing any strength, I'd come back out of them. I forgot when you said you ignore overbought stochastics. When you're coming out of a pattern, notice that we've got a pattern right now. Number one, we're staying above the T line. Number two, notice kind of a little J-hook pattern. Stochastics curling back up. So you want to be buying on a signal in the oversold area. You want to be looking for a pattern that is already in an uptrend, where your stochastics might already be in an overbought condition, and they're going to continue to stay in the overbought condition. How large can the body be before a candlestick is not a doji? It should look like a doji. I mean, you don't have to have a percentage. This to me wasn't a doji. That was just kind of just a weak day. But obviously, that's a doji. That's a doji. This is a doji. Things that have a fairly close open and close, they don't necessarily have to be a doji. They can still be a spinning top. But anything where I can see the body is real small and the tails are big, that tells me there was indecision. Yeah, indecision. And so basically what it boils down to is if you see the bulls and the bears are opening and closing right near the same level, there's indecision going on. It's the big candles that tell you what the decision was. It's the little indecisive candles that tell you they don't know what's going on just yet. Shouldn't close below the 8 exponential T-line, exactly. And now the stop is halfway down the bullish bar with no trading below today's low. Right. If they open this up and they were able to bring it all the way back down below today's open, that tells me there's no bearish or no bullish sentiment. If they closed it below the halfway point, that would kind of tell me, all right, we might now be stuck in a downward trend channel. What I'm anticipating is we should see a positive open, even if we saw a doji tomorrow, and then another doji or another positive open. Of course, at least that way we'd have a doji sandwich. And for you new folks, we are going to go through kind of the definitions of each of the patterns that work well. Well, let's go through some of the get the commodities out of the way. Crude oil, as you can see, is just in this range. It doesn't seem to be going anywhere, so it's not going to affect the market. Interest rates are getting slammed here. Not very much. I mean, percentage-wise, we're still, or interest rate-wise, we're still fairly high. But that's a good extensive pullback. Notice here, doji, bearish confirmation, closed just below the T-line, opened it and closed it lower and then gapped it down. So we're still in a downtrend on bonds, which means interest rates could be rising. Now, that may be people getting ready for the cliff. So we'll have to see. Let's see. Gold, dollar's still in a downtrend. Now, this was yesterday or what is Friday's trading. This is today's trading, the doji. This is tonight's trading. So if they start trading this down, what do you have? You've got that doji sandwich to the downside. So just always be aware that when you see a big candle, a doji, and then start trading it in the next candle, start trading it down, you've got the potential of a doji sandwich, which at least gives you a platform to trade. That if you were day trading or forex trading, at least you know that probably the dollar is going to be weaker. The bond bears are loving the downward move. That's true. Mike Gremlins are back. All right. I haven't even had a chance to get, it's not that I haven't had a chance to get over the darn, Best Buy is right near the mall, and that's exactly one place you don't want to be during this time of year. Okay. Trying to think what else. Wheat. Notice what wheat had. Wheat had this big trend channel for a heck of a long time. And where did they move it back? They finally broke it to the bottom side of this. And where did they move it to? Right smack dab to the 200-day moving average. What are they doing there? Doji, bullish candle. Bearish candle, bullish harami. Stochastics in the oversold area. So if we were next day or so, you're going to have the T-line right down here. This becomes a buy if they can bring it back up through the T-line, bouncing off the 200. Now, I'm long soybeans. And let me, again, notice where the stochastics are. This is where the disregard for stochastics. Here's your buy down here, bullish harami. Confirmation above the T-line. Now notice what it did. It did our classic. Came up and hit the 50, pulled right back to the T-line. And notice the type of trading it did it back here. Hammer, doji, hammer, or hammer doji. Spinning top. And then they curled it right around, brought it up through the 50. Today they did a doji, and this is after hours. So what is it setting up for right now? Hopefully that doji sandwich could take it up into this range. Now where do I'm right now long on this. Where do I come out of this trade? Let's make this even bigger. Very simple. Put a sell stop right here where it opened after hours, because it came back down through there. Something's wrong. That tells me they're going the opposite direction, probably back down to test the 50 to see if it's going to act as support. So again, knowing the different little patterns, at least you've got a game plan for what to do, when to stay in, and when to get out of a trade. Okay, let's see. Also, long hogs. They've come up, they've pulled back. Today or this evening, they're doing a bullish harami, but except they aren't actually this bad. They were trading down here, but later in the afternoon, they started trading up. This is the problem with some of the commodities, because when they close the hogs at 1 o'clock Central Time, that's what they call the outcry, the main market. Then the electronic market is still on after that. So you have to follow what they're doing. Again, here's my 10-minute chart showing me that it's still in an uptrend. So the daily chart you have to analyze on the basis of what is it really doing, because it didn't it didn't close down here. It actually closed up in this range. Is that a J hook in beaks? In beaks, huh? Oh, I hate trading beaks. Soybeans, kind of a, yes, but it's your J hook pattern that you can assess what's happening here. The first time it hit the 50, it pulled back. Now it's doing that J hook pattern, heading up. Where do I anticipate the next, or this trend to go to? Probably up here to test this level, because if this is wave 1, wave 3 should be right about up in here. Manning, no, you don't like to have it, but it's there, so you have to analyze it. And so you take that into your analysis of, that's why if I'm trading and I'm staying in a position, this looks good on a daily chart, but I'll see what the 10-minute chart has been doing. That's what I want to be trading. I'm trading the daily charts to get the gist of where we should be going. And then I'm using the 10-minute chart to tell me what I should be doing on the trades. Okay, what else do we have? Soybeans, we did the metals, the grains. I haven't taken a look at corn in a while, but I guess that's the reason. Corn's not really doing anything that you could want to trade. Okay. I use my feeder cattle. I missed this darn trade. That's just been stronger than bear's breath the whole way up. That's January feeder cattle, and it's opening up. As you can see right now, it's after hours. It's trading up a little bit. And live cattle, notice how it's supported right here on the moving averages, and it's moving up nicely. I probably got these charts too big now to see what the overall move looks like, but it's yeah, they're still moving the right direction. You're right. Unfortunately, I'm right now living in a place where I couldn't even fit a cow. Have a hard time herding the cat. What was I going to be looking at? Copper. Copper's rolling over a little bit. It's back below the T line. And as you can see, stochastic's starting to roll over. So I'd anticipate that they're coming back to test the moving averages. That's right. Okay. Now, the nice thing about this market is there is a bunch of excellent charts. And unfortunately, we're going to be here for a while looking at charts. So let's start banging through. I'm still thinking you should be buying ISIS on a positive open tomorrow. Notice what you have here. You've got this fry pan bottom that now has broken through the 50, right about the same level as this pattern started. Today it didn't actually execute because it opened lower, traded lower, came right down smack dab to the 50 in the T line, and came back up. There's your doji sandwich. If this opens positive tomorrow, you want to be buying, because I can bet you dime to donuts they're at least going to take it up to the 200, if not higher, because of the magnitude of this candle right here. So what does that analysis do for you? Number one, if it opens positive, there is an extremely high probability you're going to be in a profitable trade, which is probably more accurate than most any other trading technique that there is out there on the market. Number two, not only are we detecting which way it's going to go, but with what magnitude. So not only are you got capability of analyzing which trades are going to move in the right direction, number one, but you also have trades that are going to move in with a big move. You wouldn't have hurt yourself by buying it today, ISIS. But now it's just in a perfect position that tells you if they open a positive, you want to be buying. Would you set your stop at 10.05? Well, yes. Anything on a buy stop? Yes. Even if it opens slightly lower and starts coming up, it still puts it in the range of doing a doji sandwich. Now, Trip is another one that gapped up, coming out of this little rounding bottom, big, huge move up, pull back. Notice what this candle told us. Told us the selling had stopped. I wouldn't doubt by the end of the week, we're back up toward testing the high, which would be good for if you had bought the calls for December, which what should have been done right about here, because notice what type of pattern we had right here. Flat trading with a little Morningstar signal, which acts like a mini scoop. So there'll be a slingshot, high probability reaction on that. Carl, yeah, anytime you're asking about a stock, you need to put which one, because we go zipping through these. And Brendan, we'll get to all the individual stocks at the end. Just hold off on that. We got a bunch to go through. Q-Core, another one. Now, there's two aspects for analyzing which stocks you want to be in. One, you want to see that it has a nice chart. And two, you want to see that if the chart works, that you're going to be in a big percentage price mover. If you have a very nice chart and you can see that the upside potential is only 4.5%, that's kind of wasting or putting money in a risk factor that's not going to produce a lot of reward for you. What I want to do is find the chart patterns that tell me if they do work, that there could be a big percentage move, like 15, 20, 30, 40% to the upside. That's exactly what I'm looking for out of coming out of Q-Core, that if they break this one out, notice what's happened here. We've got a little rounding bottom. And a rounding bottom, somebody was asking the definition yesterday between a rounding bottom and a fry pan bottom. And so I can clear it up. A rounding bottom is usually in an uptrend where it's pulled back and kind of hugging the T-line and ready to come out the other end. Whereas a fry pan bottom may be at the bottom of a trend, and it'll be a big, slow rounding bottom situation. So a rounding bottom is in an uptrend, pulling back and then curving back up, whereas a fry pan bottom is a much bigger, usually at the bottom of a trend. And we're going to get to that here before too long. NH, and the ones that we're going through right now are pretty much the ones that we've been participating in recently. Well, shuzzbutts, what's happening here? S.NHD. Well, this ain't a fine howdy do. Let's try something else. DJI. Unknown token. Well, that ain't. How did that happen? All right, there's your fry pan bottom. Nice rounding bottom. And then a breakout to the upside. This is why we got into NIHD the other day. So somebody asked a question today, and I hope you're in here. The question was, if it came up through and did a doji right here on the 50, does that make it a buy? And not necessarily. All that tells you is the uptrend might continue. If it had done a doji here, would just given us some simple guidelines. If it had opened positive, they were taking it up. If it was opening lower, they were pulling it back to do some profit taking back to the T line. So as it closed today, notice it did come up through the 50 and moved higher and closed near the top end of the trading range. Stochastics just climbing into the overbought area. Still tells me there's probably a move that could probably come up, fill this gap, and then if you saw profit taking, the profit taking would probably come back to the 50. So if you saw a sell signal up as it got up to this level, you take profits, then just wait to see what it does once it gets back to the 50, and if it does a buy signal, you buy back in on a J-hook basis. All right, we got that one. Is the mic working all right? Let's see. Have you ever considered factoring in a stock's beta, historical volatility, or implied volatility when selecting from among equal candidates? Nope. I don't care what all that history has been. What I'm interested in, because look at what the beta would have been for this one for the last month and a half. I'm interested in what the signal or the pattern's telling me is about to happen, which has absolutely nothing to do with this over here, other than this was setting up for a strong price move. All right, we better get through some of these, or we'll be here until Santa comes home. All right, this one is still a nice fry pan bottom, and we're just about at the breakout level, holding on to this one. Now, Doji sandwich setups. ABFS. There's our left-right combo right here on the T-line. Big day, Doji. If this opens positive tomorrow, you want to be buying it, because if it's trading positive, what's it doing? It's probably breaking out through here, which everybody's going to see, and you could probably have another big day. Let's see. All right, great. Sounds good. No sound after 5 re-logins, huh? See, no video, but no sound. Okay, Jim, if you can help Don. Okay, you already are doing that. You're way ahead of me. Okay, Andrew, yeah, I look at cars in Bell Vernon. All right. Okay, so that's a Doji sandwich potential. Again, a positive open is going to move us probably with a big move. Same thing with EXPR, another one we've been playing with. Notice what it's done. First of all, it did kind of a morning star signal, left-right combo, right here at the T-line, closed with a Doji today. If it opens positive tomorrow, what is it doing? Probably moving positive. If it does, it's breaking out to this level. Look for a Doji sandwich on this one. That's EXPR, yes. Okay, Athens, ATHN. Started this with a left-right combo. There's your rounding bottom. Breakout, pull back right to the T-line. Doji, bullish confirmation. This one could have another move, same magnitude as this right here. Code, CODE. Hugged the T-line, pulled away from it, came back, tested it. Did a bullish harami today. If it opens positive, you want to stay with this one. You're still in a nice, strong uptrend. INFA. There's your scoop pattern. Flat handle, pulls back, and there's the scoop. And what happens on the scoop? Slingshot effect to the upside. Their test sound isn't working either. All right, Don. Okay, is it my sound is Jim that's having gremlins, or is it everybody else's sound? All right. Okay, we'll keep zipping along. Thank goodness these are recorded. Okay, here's the classic. Fry pan bottom. Where's the dimple? Right here. It tells us about the same from here to here. It will be about from here to here. This one goes a little bit quicker. But notice what it did when it got back to this level. Gapped up. So what do you have coming out of fry pan bottom? A good strong price trend. What do you expect after a good strong price trend? Price and profit taking. So you've got fry pan bottom, strong price move, J-hook type pattern. Now look what they did today. They gapped this one up. This is why we were recommending it. If it opened positive today, it'd be breaking out of this area, starting the next wave. Unfortunately, I guess somebody said today that they don't have any 55 options on this one. This would have been a nice 50-55 call spread. And ECYT pulled back, doing a J-hook, kind of a doji here. I'd look for a positive open. If it breaks out through this level, should have a good strong price move. All right, a couple more that look good. Here's a J-hook pattern setup, RES. There's your doji sandwich. So if this one opens positive, anticipate another move like this. And BGS, we recommended this one a couple of days ago, but it didn't execute. There's a kicker signal. It hasn't pulled back to where it closed more than halfway down this candle. Let's make this big enough to see it. This one you definitely want to be buying on a positive open. Oh, I made it way too big. Then you want to make sure, well, it looks like it's just now breaking out through that level. So this one you can be buying on positive trading. And NTRI. NTRI, make this a little bit bigger. Left-right combo, bullish confirmation above the T line. Notice the T line, what it's doing. You got doji, 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 doji. If this trades above here, you put a buy stop up here. If it trades above there, it's opening positive. After a doji, after 4 dojis, stochastic still heading up. Tells me they're probably, if they break out through this level, they could easily go right up to the 50-day moving average. Brian, we'll get to the kicker signal. Oh, but I can see if there's one in here. Kicker signal, we'll get to one now. As soon as I see one, I'll show it to you. Ron, when you have so many opportunities, you go back through and you just kind of cultivate which one has the most strongest signal and which one has the best upside potential. Sometimes you have a very strong signal, but the upside potential isn't that great. So sometimes you're going to take a less strong signal, but the upside potential is much greater. And so I'll kind of work that in as we go through. Oh, BGS, all right. Yes, right. I just looked at one. BGS has kind of a kicker signal right here. I say kind of a kicker signal. It's where they open it here and close it here. The next day they gap it open at or above the previous day's open and go the opposite direction. Now, a true kicker signal shouldn't have any tail to the bottom here. But the fact that they have a little tail just tells you that was wobbling before they got it started. But this is the message right here. The bears were in control, then they kicked it in the opposite direction. That's usually going to be followed by a very strong signal. Yes, Vivas. As a matter of fact, Vivus will probably be on, this is not really a kicker signal, but Vivus will probably be on the recommended list because notice what it's done. Doji, 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 right here in the T line, gap up. And what is your best friend? A doji followed by a gap up. So this one is probably going to be on the recommended list tomorrow. Notice how it started. Bearish Harami or bullish Harami. It closed above the T line. This is why you want to know what the characteristics of each signal is. These are dojis. Remember, dojis are indecision between the bulls and the bears. So if you see a pullback that's indecisive, that pretty much tells you that there's not very much conviction in the selling. Get ready for more upside. First target obviously would be the 50. There's a gap right up here. And then wouldn't be surprised if they don't come eventually back up. Well, I say surprise. Let's take a gander here without having to slide the chart up and down. I would suspect that if they can get through the 50, they're going to go to the 200. Where is the gap? The gap is right here. Make it big where you, gap is, this is where Friday's trading was. Then they gapped it up. Notice the white area here. They gapped it up well above the trading range of the previous day. Would you take all your shares off the table at the 50-day moving average? No. Now, remember, the first target is this area right here. Now, if it opened tomorrow and came up all the way up here, which means your stochastics would probably now be up in the overbought area, and they were stretching it to get up there, yes, I might take some off the table there. But if they had another day up, then another day that wasn't very far to get to the 50, I'm going to watch to see whether they're going to take it through or fail at that point. So it all depends on how they get there, is how you make your decision. Where are they going to fill the gap? Where are they going to fill the gap? Again, this gap up here. Do you consider any news that might have, Judy, of course, but if it's just running like it should without any news, news is always going to affect and always becomes a new consideration. Now, that's the target. If there's news tomorrow that comes out and says that they did something bad, and it opens here and starts trading down, obviously you're not going to get into the position. Okay. There was news. All right. So if there was news, that's what created this. So remember, the candle is just basically the cumulative knowledge of everybody buying and selling during a specific time frame. So if they like the news, which apparently they did, that's when you want to be buying. Now, the same news, had it opened here and gone this way, that tells you they didn't like that news. The chart is telling you what the reaction was to any news. Sometimes, and that's the old rhetorical question is, how come a company just came out with great news and the stock went down? Well, two things. Either the news was anticipated and people were selling on the news, number one, or the great information in the news wasn't quite as great as what everybody was anticipating. They wanted more great. Did you say you want until the close for a sell signal like the 50 to lighten up at a 50 MA failure? Not necessarily on the close. If I saw this all of a sudden spurt up here tomorrow in the first 30 minutes, moved our stochastics up in the overbought area, and I could see on that it was resisting here, maybe on the 5-minute chart or the 10-minute chart, yeah, it's stretched to get here. I might go ahead and take some off the table. But if it took maybe 2 or 3 days of solid trading to get up here, and we're not very far away when it opens the next day and hits there, I'm going to wait to see whether there's still enough strength to push through or not. Okay, let's see. The after hours has the E-minis up 525, but the what is that? The Dow down 12. Damama, I don't pay attention right now. The information on in the market or on the market indexes after hours doesn't mean a hill of beans. I'm only concerned of what it's doing about 7 minutes before the market opens tomorrow. That's when the big guns are making their decisions of what to do. Brendan, again, ask the individual ones. Do you concern yourself of major market trends? Yeah, exactly. That's why we can do the analysis of what the major market trend is. Right now, our trend is upwards. Are you saying that that potential target, such as an MA, can be a function of time and price? Yes. Yeah, and what type of signal it took to get there. So, again, I'm anticipating Vivus there it is. It's going to eventually get up here to the 50. If it takes 3 solid days to get up there and they're still moving up, that's different than if they open this up and take it right up tomorrow. Now they've really stretched from, so I'm going to see what they do when they get there to see, because what's everybody else watching? They're going to watch to see what happens when it gets to the 50. Oh, Brendan, no. What will happen is when I get all done, because we're not even 1/3 of the way through yet, when I get all done, I'll tell Jim to do the double lines, and after the double lines is when you put in your individual stocks. So even a move to the 50 in 3 days, that is another 10%. Yeah. Now, we did the same thing in NIHD. That we moved from here to here in 2 days, but stochastics weren't quite in the overbought area yet. So today, when it came up, it was getting a little bit like maybe they weren't going to go through. So if this had kind of stalled and closed below the 50 today, I may have taken half the position off. But the fact that by the end of the day they took it through tells me, all right, they're not worried about the 50 anymore. So what's our next target? Our next target is, let's see if they come up here and fill this gap. Anthony, no. I just said that wheat would be a one to start going long if it's see a buy signal confirmed up through the T line. But I am long soybeans. Soybeans because it has a very nice chart to it. Except now it's selling off. That's just a fine howdy do. Came up, touched the 50, pulled back, doing a J hook, looking for it to come up strong. Was iffy, and then underwater blowtorch melted the blue ice to get out. I guess so, Chuck. That's more of a description than I could come up with. All right, let's take a look at some more here. TROX. Another one is coming out of this kind of a rounding bottom. Where do you start looking for buy signals? When they gap down in an oversold condition. Now it's traded flat. Had a nice buy signal, pulled back, gapped up. I'd be buying this on positive trading tomorrow. HOV, which has been mentioned quite a bit here in the, that's not the HOV we want. This one has this going for it. kind of this wedge formation. And now they broke out to the top of the wedge. Oh, hang on for a second. Okay, so anyways, the breakout of this wedge tells me we might be ready for another big move to the upside. Okay. All right, let me see which ones are it. ROEX. ROEX was the next one. Staying up strong, pulls right back to the T line after hitting the 50 area. Bounced right back up. This one, J-hook pattern. Wouldn't be afraid to be buying this one on strength tomorrow. S-Fly. Another one that came up right through the 50 after a series of dojis. This one you can be buying on strength tomorrow. Price target, I don't know. If this is wave one, which is about a point and a quarter from this area would take you up to the 650, which comes right about to the same level as the recent highs. Hero was another one that was asked about today. Notice how it's pulled back, inverted hammer, bullish, gap up into new high territory. This one I wouldn't be afraid to be buying using the halfway point of this candle. If it opens positive, it should be going this way. If it closes more than halfway down this candle, that tells you the bears have come back in and it's closing right back into the trading range. What's telling us is that we should be out of the trading range, and we did it with some good force. So you definitely don't want to see it come back. HIBB. Kind of a scoop pattern set up here. A little kicker type signal. Not a true kicker because this candle usually is a big candle. But you've got that scoop type pattern. Wouldn't be afraid to be buying this one on strength. And Sears Holding. Another one that's come up. There's your kicker type signal. Opened here, closed here. Gapped up and went this way. Now it's consolidated, and they've taken it back up through the T line. This one you can be buying with the anticipation that they'll come up here, test the 50, would be right about that level. Yeah, kind of a double top breakout. Yep. And AMED. Nice steady uptrend. Little consolidation. Came back up through. Next target right now is the 200. And NXPI. This is kind of your advanced methods where they've taken it up, strong signal, consolidated, but they couldn't consolidate back below here, and now they've taken it up and closed above this candle. That's like kind of a continuation pattern. So there's still more upside to this one. And I think FSL, somewhat the same situation. Took it up 1, 2, 3 days, right back to the T line. Now they've taken it up and closed it just slightly above this candle. Likely that the 200 is the next target. And XPO, rounding type bottom. We're closed right here. Got a wave 1, wave 2 setup. If this one opens positive, you want to be buying with the anticipation you're going to get another 5-point move out of that stock, which would be a decent return. Brown shoes. Nice strong move here. There's your best friend. Doji, gap up. There's your indecisive pullback. Now you've got a bullish engulfing signal right here at the 50. If this opens positive, you want to be buying because that's going to start your wave 3, which will be that magnitude. And MKTG. You can see what this one's starting. It's starting that fry pan bottom. So if they start trading this back up above the T line, you want to be buying it because it's this from here up to here. That's going to be a good percentage move when they break it out. Now remember, hang on to your individual stock questions until we get, when I tell Jim to do the double line. All right, doji sandwich. This is what a doji sandwich is. Let's go through some of the definitions. A doji sandwich is when you have a strong move, a doji, and they open up positive the next day. This candle is usually going to be about the same magnitude as that candle. A J-hook pattern is when they take it up, they pull it back, and then so if this is wave 1, wave 3 is usually the same magnitude as wave 1. It just has a little J-hook in there. And right now we've got a few of those setting up. LNG, nice strong move. Now, I say nice strong move. This is moved from the 14 range to the 18 range, $4. If it moves from $4 here, that puts you into the $21.50, $22 range. Notice the morning star signal. That'll start your next wave up. 4 points on $17 is a good 25% return. And VIP also came up, pulled back, came up through the 50, pulled back. Notice you got your inverted hammer, bullish confirmation. Look for, and then if they open up positive, where are they taking it? They're breaking out into new territory. Look for it to come up at least up into this range. And L and C, another J-hook pattern that if they open up positive, they're going to be breaking out through this level. And so that's going to give you some good running room. How many points here? About 3 points. Gives you a 17% return. Oops. I've lost my place. Zolt. Z-O-L-T. Also, let's see. Zolt. Notice you're kind of a little belt hold, bullish engulfing. Tells me they're going to take this up to the 200. These are all good-looking charts. So it all is a function of, whoops, that's feeder cattle. Let's see. That's feeder cattle. That's not what I want. You know what? There's another nice J-hook. Now, I say these are nice J-hooks because you have a nice strong move. Notice where they pulled it back to. I mean, you can't unnotice this. They pulled it right back to the T line, the 200 and the 50, and did a morning star signal. This one's going up another 20% from here. A belt hold. A belt hold, what was the one we just did for a belt hold? LCN or LNC? Here's kind of a belt hold. A belt hold is when you have a trading range, they gap it down way below the belt hold and then bring it back into the trading range. Not necessarily a signal, meaning a bullish or a piercing or a bullish engulfing, all it has to do is come back into the trading range area. So essentially, what that means is they gapped it down a little bit, took out all the sellers, and the bulls stepped in. So when they took out all the sellers, what's in front of them? Nothing much, because they just took out a lot of the sellers, so it usually means there's going to be a fairly good run after that. All right, your left-right combo. Well, says much. Left-right combo is where you have a doji followed by a bullish engulfing signal. Notice you had kind of a rounding bottom here, and at the end of a long, flat trading area, you have a doji. If you see a signal after that, meaning a gap or, in this case, a left-right combo, that's the direction they've decided to take it after that indecisive trading. Yeah, belt hold is based on the Japanese rice traders say that one of the sumo wrestlers is trying to back out of the ring, and the other one grabs the back of his breeches and pulls them back in. That's how the term belt hold got. Here's another one with a doji gap up. What is this supposed to be? It's supposed to be a left-right combo. So somewhere it's, but this one's a good chart with the doji gap up breaking out through this level. KKD. Well, what have I done? Those aren't. Well, they're. This must have been more of a belt hole or a left-right combo. Again, a doji with a bullish engulfing. But as you can see, it is a nice rounding bottom. If this is wave 1, wave 3 should take you up into the $11 area. Yes, as much as sumo bridges are diapers, I guess. All right, the scoop pattern. We've made a lot of money with INFA because you had a flat handle and then the slingshot effect. So, DHI has kind of that little scoop effect setting up. This one you can be buying on positive trading. Notice your stochastic is still way down here, which gives us good ample strength to get through the 50. And if it does that, you're going to have a good running room. And IMOS, another little mini scoop. Notice that this is a Morningstar signal, making that mini scoop, but that's usually the indication something has changed, and that's where they start getting a good strong move off of that signal. Let's see. Your best friend again is that doji followed by a gap up. Little doji followed by a gap up. Strong price move. Now, this is why I say watch what it does once it gets to the resistance levels. This one came up, hit the 50, resisted right back, came back and tested the T-line, came right back up again, went through, came up. This time they did another doji right at the 200, sold off the next day, a good place to be taking profits, seeing what it does the next day. Now we had a bullish hammer. If it had opened positive, you would have been buying. Well, it opened negative. You're still short. Now you're back down here. This one's very simple. If it opens positive after your best friend, they're more than likely bringing it right back up to the 200. And fry pan bottoms are big money makers. Sky W. Nice big fry pan bottom, just now breaking out. This one you can be buying because notice where you are, your stochastics are in the overbought area, but where do people buy? They buy enthusiastically at the top, and that's exactly what a fry pan bottom tells you, is that the investor sentiment has built back up again, so it's very confident. And now they're breaking it out with enthusiasm, and that's where you want to get in. There's a little fry pan bottom with a doji, inverted hammer, doji, bullish confirmation. This one you can be buying with the anticipation you're coming up to the 50. Constant contact. Another little fry pan bottom. Right now at the 50s. It makes it very simple. If they open this above the 50, they're going to come up and fill this gap. So even though that's not too far away, at least you know when you get into the position, you're already going to probably be trading profitably. Okay, I will see. The LVT is a nice fry pan bottom. This one, all you can do is stay with it until you see a sell signal. CVG, and same scenario. Now, this is a classic. Notice your fry pan bottom. What do you expect out of a fry pan bottom? A good, strong price move. What do you expect after a good, strong price move? Profit taking. So there's your J hook. There's your next J hook. This one's still in an uptrend. It can be bought if you're coming out of the fry pan bottom and doing J hooks on the way up. And CVC, fry pan bottoms in here, rounding little cup and handle, now breaking out to the upside. And BTH. Try this BTH. Nice big fry pan bottom. This one, even if you bought this now with the anticipation it will be a move up to the 50, which would be right about where the breakout area, that's 2.5 points on a $17 stock. That's still, oops, I guess it's an $18, $2 on an $18 stock. That's still over a 10% move on a high probability pattern. And MSCI, there's your fry pan bottom, move, J hook. That's a perfect combination. It's a fry pan, strong move, J hook, next strong move. And NFX, same scenario. Fry pan bottom, J hook. This one could be bought with the anticipation that the next move is somewhere up here. Once they get past this level, notice you're not going to have any resistance level until you get up into this area or up toward the 200-day moving average. Okay. Now, the difference, again, I mentioned between, oh, man, I'm way over time. Man, oh, man. A difference between a rounding bottom and a fry pan bottom is rounding bottom is usually being in an uptrend. Oops, that's not what I want. In an uptrend, and then it slowly curves back up and breaks out to the upside again. This, again, is that buildup of investor sentiment, and they break it out to the upside. Very strong, high probability trade. There it is again with kind of a little rounding bottom, which means if they break this through the 50, you're going to have some good running room on this one. SAH. Yeah. Nice rounding bottom, broke out, and notice what it did today on a breakout. Broke out through all these levels. So this one's got more upside to it. And what is that? I'm going to try this. KMI. Rounding bottom, breakout. This should have more upside to it. Yeah, that's my problem too, Chuck, is I've got all my positions filled. So I have to look at my positions and say, which ones would I want to sell to free up money to buy a new position? And is that new position going to have a lot more upside potential than my existing position? So that's why I've often said in the past, if you have a position that looks iffy, why stay with an iffy position when you've got plenty of excellent positions out there? So, and this also improves your probability of being in good positions, that you're not having to worry about, oh, do I get out here now? Should I hold this any longer? You might be coming out of positions that aren't already to the top, but their upside potential is now starting to lose some. You've already made some good profits. The upside potential is getting smaller, plus your risk factors bigger because now you're up in an overbought condition waiting for some more upside, whereas the next one you're looking at might be just starting its upside move with a very strong buy signal. Your probabilities of moving to the upside are much greater percentage-wise as well as probability-wise. LRN. This is a double doji. Notice how it came up, pulled back with a kind of a spinning top doji, and the next day bullish engulfing signal. That this indecisive pullback tells you to look for some more to the upside. WLP, double doji, right back to the T line, more upside. Where's this going? This is probably going up here to the 200. And the cradle pattern, WIBC. Those kind of has this flat, usually has a big headboard, then this flat trading. This one can be bought because the worst case scenario is if you see a series of dojis followed by a bullish confirmation, they're going to take it that direction. Notice what this one has done. Right on the 200-day moving average, stochastics coming up, inverted hammer signal right here on the 200, bullish confirmation. Close above the T line. This has every and kind of a pennant formation breakout. This has every reason to buy it. That's WIBC. Let's see. If I remember correctly, I was going to try to so here'd be the top four that I'd be looking at tomorrow. Vivus could have the potential, especially breaking through the 50. All the way up here, you've got pretty close to a 25%, possibly pretty close to a 50% move if it goes to the 200. TROX. Another one that if it's, notice what you've done. You've had this big downtrend, gap down, flat trading, gap up. They could take this right back up into this area. 23, see, that'd be a good 30% move. HOV. Oh, shiz butts. This pennant breakout, this one could have a good good 2 points to it, giving you a 35% return. And then this last one we just looked at, WIBC. This has every makings of a good, strong reversal. Do you place your buy stops before the market opens? Not necessarily. Unless I've got, now there's really never a time where I've got so many positions that I can't get them all done at the same time. Unless we all of a sudden see a doji gap down in the Dow yesterday, and then we wake up the next morning and the pre-market futures are up 120. Yeah, that's where you want to close out as many of your short positions as possible and get into long positions immediately. I may put some buy stops on before the market opens. But most of the time, if I've got a portfolio of 10 positions, it's only going to be one or two that's going to be ready to come out of one and go into the next one. And that only takes 40, 50 seconds to get done. Okay, that's about all I have for tonight. Do we have any questions? Oh, that's right. ISIS was also going to be a strong probability. But we recommended it today, so you're probably going to just see that as a reiteration of a recommendation. Not any individual stocks, just candlestick questions. All right. If not, Jim, go ahead and do the double line. There you go. All right, Jim, in 15 seconds, do another double line. right. ANR was another one that we had, but it's now just touched the 50 and did a kind of a bearish signal. If it opens lower, take profits, and then just see if it doesn't come back to the T line and do kind of, because essentially what you have got set up here is that fry pan bottom, price move, pull back, watch for a J-hook pattern. ASNA, that's a good looking chart. Whoops, that's not what I want to do. Doji, hammer, little gap up. This one can be bought. Just be aware that once it gets up into this downward trend channel, you got to watch to see if it'll break through there. All right, we did ARNA, MCP, S.MCP. This one should be setting up also. There's that little rounding bottom, breakout, inverted hammer, doji today. If it opens positive tomorrow, you want to be a buyer and just use the T line as your stop. It shouldn't come back down through there. TPX, this one, fry pan bottom, breakout, continue to hold this one as long as it stays above the T line. And Ellie, this one, little morning star signal. Let's make it unflat here and see what it looks like. Yeah, this one, if it opens positive, you can be buying. That should be a good trade. Sherwin-Williams. That's a good-looking chart. Now, just be careful. This is an institutional trade, so obvious an option trade. I would draw a line across here. That's your upside potential. So look at some of the call spreads. Maybe a 155, 160 bull spread, or even a 160, 165 bull spread. Let's see, gap above the T-line, bullish reversal, upside potential. Upside, again, upside potential is probably the top of the trend channel for right now. ENTR. ENTR is not impressing me one way or the other. I would probably be someplace else at this point. And BPAX. This is a fry pan bottom, also with a cup and handle. I would put a buy stop up here, just above this level. If it comes up through there, the cup and handle breakout is in progress. IBM, slow uptrend, but very slow. And also an institutional trader. So it'd have to be an option trade, but I don't even really see any good option trades in that one right now. FFIV. This one's having trouble getting back up through the T-line. So this one, if you're short, you stay short. But if it opens positive now, you close out the short. But as you can see, you're going to be still in a very slow uptrend. I'd be trading something else. And Morgan Stanley, this one you can be buying if it breaks out or opens positive and breaks out through this level. Nice fry pan bottom. ACUR, this one you could be buying on a positive open. If they open up positive, it tells you the profit taking is over. They're still taking it up. Just make sure the volume's good on this one. And BGMD, inverted hammer today. If it opens positive, you can be buying immediately just using today's low as your stop, meaning it shouldn't trade at all back below that level. BBBY, another fry pan bottom, rounding bottom. If it opens positive, you can be buying this one. That's a good looking chart. And CHS. CHS, let's make this bigger. Chico's just doesn't have the magnitude to move, and it's not a real good, there's not any real good bullish signals down here. I'd be trading something else. U.S. Steel, this one broke out of that fry pan bottom nicely. Look for a doji sandwich. If this opens positive tomorrow, you want to be buying immediately. All right, Kizu. That's a perfect fry pan bottom. That's got a... if this opens positive, you want to be buying immediately. That's a very nice chart. NERU, make sure your volume's good. This one you stay long as it doesn't close below the T line. And Ivan, this one needs to open positive and trade positive. If it opens lower, it's coming back down to the T line. SZYM, another one that needs to open positive. Notice it came up through the 50, came back, just touched the 50, came back up. If it opens positive, you want to be buying immediately. Avon Products, stay short as long as it stays below the T line. Home Depot. This one has a Morningstar signal, but it's an institutional trader. It's going to come back up to the top of the trend channel, which isn't that big a price move. That's only about 6 or 7%. I'd find something with more volatility to it. Potash, a J-hook pattern in the making. Would anticipate your next target is a 200, but there should be enough energy to get it up through that level on a wave 3. SDS, stay short on this one, or go short on any weakness. DNDN, another big, huge fry pan bottom. Wouldn't be afraid to be buying this one on positive trading, anticipating a move back up to the 200. That's a good-looking chart. We did U.S. Steel, ANR, FI, we did that. EBIX. That's a nice little breakout. This one you can be buying, anticipating at least a test of the 50. That's a good chart. And ALXA. That's not a great chart. Yeah, it doesn't have a signal here. Yeah, I'd be trading something else. That one's that's ugly. Not necessarily ugly, just very hard to read. PBR, you stay long as it doesn't close below the T line. And ACI, this one is caught in between the T line and the 200. I'd put a buy stop right above here, that if it comes up through this level, they've broken through the 200, and that's where they'll start breaking it out pretty quick. Beam, nice little pullback. Advanced methods. This one still has more upside to it. And Amazon. Bounced off the 200. Now it's pulled back, done a nice little J-hook setup. This one can be bought on positive trading. And speaking of which, if anybody's read the history of the North Pole and find it intriguing, I'd appreciate any comments you could put out on Amazon for me to get ready for next year. Ford, stay long as it stays above the 50 for the long-term hold. It's not a wonderful trader right now for the short term. Lulu, another one that you stay long as it stays above the T line. GMRC, this one, if it opens lower tomorrow, you might consider going short back down to the 200-day moving average. Goodyear, This one's doing a little J hook. This one can be bought on positive trading using the T line as your stop. Halliburton, same scenario. If it opens positive, it's consolidated. It's still got more upside, probably back up to about the 38, which is right at the same level as where it peaked out before. ADT, stay long, might have a doji sandwich setup. Wouldn't be afraid to be buying this one if it opens positive. ARNA is just caught in this pennant formation, but it's doing a doji sandwich. So this one becomes a nice trade in the sense that we're just, whoops, that was close enough anyways. Just breaking out through this trend channel with a doji. Notice how it consolidated back almost to the T-line. If it opens positive, you got a doji sandwich, which means they're breaking out through this level. You're probably now in wave 3. Info stop. I wouldn't want to see it trade back below today's low. If it comes down through there, that probably means they're profit taking, coming back short term back to the T line. Vivus, you want to buy on positive trading. Apple, stay short until you see a buy signal and a close above the T line. It's not there yet. ASNA. Oh, we did that one. That's a good looking chart. You could be buying that one. Telephone. Whoops. S.T. Telephone, that's just sideways. Wouldn't be long or short, that one. That's boring. And CENX. This one you stay long as it stays above the T line, especially if they start closing above the highs. Let's see. Scroll down some more. JP Morgan. This one's just about ready to break out, which means there's a little J-hook pattern. If they open a positive, they're breaking it out, which means if they're breaking it out, there's still good confidence in the brokerage, which means that's good indication the market is still in a positive direction. Goldman coming out of this little fry pan bottom, also moving up. Goldman just has a higher price, a bigger percentage, a bigger move it has to move bigger to get that 10% move. Krispy Kreme can be bought on positive trading tomorrow, coming out of this little rounding bottom. HHS, another little fry pan that you want to keep an eye on. If this, especially if it breaks up through the 50, you want to be buying aggressively. Citigroup. S.C. This one broke out into new high territory, probably moving up further. Notice a little gap up to break it out. And WFT, J-hook pattern, not a strong one, but if I was going to buy this, I'd put a buy stop at 11.10. If it comes up through the 50, it's going to be confirming the J-hook pattern. Exide. Exide's always had a problem getting out of its own way. It's you would think with the energy stuff going on, but now we're up in the overbought area on a big price move. We're getting back to the congestion area. If you own it, you stay long, but I wouldn't be buying it up here. AXL, whoops, AXL. This one you stay short. Notice the failure at the 200. Now they can't get it back up above the T line. As a matter of fact, you can short this one on any weakness. QCOM. This one's a toughie right now. I wouldn't be playing this one way or the other. Just you don't have a pattern to go on. So in this type of case, I would just take my money and go someplace else where I could read something easier. Bank of America, you stay long until you see a sell signal. SanDisk. SanDisk setting up for a J-hook. I'd rather pay $43.50 knowing that it's come back up. And KALU. This one you go short on any weakness. But again, this is an institutional. Unless they really pull the bottom out from underneath it, I probably wouldn't be long or short this one because there's just no price movement to it. SWC. This one you stay long as it stays above the T line. And Nokia. Another one that you stay long as it stays above the T line. You could probably be buying it just now coming out of this next little J-hook congestion area. And ADNC, this one also you stay long as it stays above the T line. Starbucks. Oh, I'm also supposed to mention that I guess Abraham sent out the information that if you want to get the book packages, you probably need to get your orders in today, if not tomorrow, if you want any hopes of getting them before Christmas. Some of you that bought some last week, those have already been shipped. You should be getting them any day now. Starbucks, stay long until you see a sell signal and a close below the T line. Same scenario with TEX. Inverted hammer, bullish confirmation. This one is still in an uptrend. I say that because anytime you see a bullish inverted hammer and confirmation, that's very strong probabilities that they're moving it up higher from there. KERX, I wouldn't be long this one. There's just nothing there right now. That was KERX MTW. Stay long as it stays above the T line. TEVO. TEVO, nice rounding bottom. This one you can buy. Just make sure the volume's good on it. You're in a very low price stock. But you're getting this double bottom, rounding bottom. Usually means they're starting to make up their minds which way they want to take it. Joy, another one that needs to open positive and trade positive. If it opens lower, you're going to get that little J-hook setup off the T line. Caterpillar, stay long as it stays above the T line. And WPZ, WPZ, trying to bottom at the same place it bottomed before. Put a buy stop at 47.05. If it comes up through there, they're moving up positive. CMI, this one all you can do is stay long as it stays above the T line. And Dollar Tree, this one you can buy on a positive trading tomorrow. Double bottom now coming back up through the T line. Do we do Bed Bath & Beyond? Another one that can be bought on positive trading. If you can't be watching markets at the open, is it too risky to place buy stop orders or entering positions? No, provided that before you head off for work that you can see that the pre-market futures are trading somewhat positive. If you're heading off to work and the Dow futures are down 70, I wouldn't put any buy stops out there. But if the Dow futures are up 40 or something like that, and you see the stock that you want to buy, yeah, put your buy stop in. Hopefully everybody's got the capabilities of checking it once you get to work. And I'm saying guessing because I've been told with all the newfangled information stuff you can have on your iPads, your phones, and that sort of thing. There probably should be ways where you can set up what your positions are doing right on your telephone and keep track of it. FCX, this one has gotten up through the T-line. Stochastic still down close to the oversold area. This one you can buy on positive trading, anticipating that the T-line's now not acting as a resistance. We did Bank of America, let's see, S.CLF. CLF, I'm just daydreaming here for a second. Nice fry pan bottom. Look for a breakout. Now, you're running out of stochastics, and you got two resistance levels here and here. So just if it breaks through that, you want to be buying. Okay, USG. This one you can buy breaking out of this wedge formation on any positive trading tomorrow. After you get the reversal candle signal, do you always wait to close above or below the T-line to buy or sell? No. Depending on where you are, if you're a good distance away from the T-line and you see a reversal signal, you can go ahead and let's say it's a buy signal, you buy, but your first place to watch diligently is to see what it does once it gets to the T-line. That if it fails, then you know you get right back out of it because the T-line's still acting as resistance. If it goes through, you know you've got a good trade. Same scenario on the upside. That if you're a good distance away from the T-line and you start seeing sell signals, you don't really have to wait for them to confirm. You get out as the first signs of confirmation because that means they're probably coming back down to test the T-line. We'll do a session. Oh, I had so much planned for December, and we're almost halfway through December already. We may have some impromptu trainings here over the next couple weeks, depending on how many people are traveling and going to be away from home. But if you're going to be home, we may do some evenings where it's cold and snowy and blowing outside, and we're just sitting around with our hot chocolate and our wassail. We may do things like entry and exit strategies, stop losses, that sort of thing. But it will probably be impromptu where you'll see it in the morning or afternoon comments that we're going to do one that night. And hopefully we can get more information out through Abraham that something will be going on. Okay, where am I? Enoch, kind of a kicker type signal. Continue to hold this until you see a sell signal. And CHS, I would rather buy it after it's come up through this level. I'd rather pay 19 for it, knowing that it broke out through this downtrending channel. Anyone, did we cover BV? My computer, BV. Ooh dear. BV stayed above the T-line today, but it has to open positive and trade positive to stay in it. If it opens lower, close out and starts trading down, close out the position. The fact that it gapped up through told us we should be in an uptrend, and if they can't get it back up or stay above the T-line, you want to be right back out of it. RGR, stay short until you see a buy signal. That's a perfect short with a gap down. This is why whenever you see a doji gap down, that's the direction it's going to go. That's your best friend. There's your bullish Harami with a gap up. There's your doji with a gap up. So let's see. The North Pole book is a beautiful print. Oh, thank you, Jim. I figured if your people were sitting reading to kids that they'd want at least some good color pictures. AMD, this one you stay long as it stays above the T line. That's a good looking chart. Put a little star next to that one. OCZ, that's another good looking cup and handle type setup. You can be buying this one on positive trading. Notice that we were out of it, or should have been out of it for a while, because when it reversed, it didn't show any signs of reversing until today. Kind of a kicker type signal. So if it opens positive, you want to be buying. HCA, I would be trading something different. This is at best, a sideways channel that doesn't have any potential to it. And GEO, same scenario. That can't get out of its own way. You're right smack dab where it's been trading for the last 2 months. Yeah, I wouldn't have my money on that one. Zaza, Doji Sandwich potential. Buy it on a positive open tomorrow. FAMR, whoops. Well, maybe FAMR is not a symbol. UTX, this one you stay short until you see a buy signal. And BPOP, this one can be bought on a positive open tomorrow in that new breakout territory. We did North Pole History Gate book. All right. Thank you, David. Oh, good. Remember, if you give them to anybody, if they like the book, any help with recommendations on Amazon would be greatly appreciated. To the point, if you're a member and you put a positive comment on Amazon, just email Abraham at candlestickforum.com saying I put a whatever, a reference or a review on Amazon, and we will send you whatever little prize you'd like, whether it's poster, flashcards, mouse pad. I know that's exciting for everybody. TROX, I'd be buying this one on positive trading. If they gapped it up once, if they gap it up again, you want to be buying. That tells you they want to scoot out of here, and they'll probably have good upside. Yes, I think all the Androids, I just don't. My problem is I don't even know how to answer my phone yet. And then it's got these screens that if you turn it, the whole screen turns sideways. So I got to chase down the numbers I'm looking for. All right. Thank you, Robert. Yeah, there should be apps. Okay, CJ, it's not even funny. All right. Okay, I guess we got most everything. Open higher, trade higher, open lower, trade higher versus open lower, trade lower. Yeah, let's see. OMX, Office Max. This one you can be buying on positive trading. Nice little rounding bottom setup. Big rounding bottom, small rounding bottom is still heading up. All right, and TSU. That's got a good looking chart to it. That one can be bought on positive trading. AMGN. This one needs to stay above the T line again. This one has a hard time getting any fluctuations. I wouldn't be trading it. Huh. Let's see. I will, if you don't mind, try putting those comments back in. If they don't go in the next day or so, please let me know. I'd be all right. Appreciate that. If you have any problems, email me. And okay. Oh, no, NOV. This one I would wait until it comes up above the T line. Let's see. Since last time we talked, Tizu looks very nice. That might be one to take a look at. Okay. Hope everybody has found a few to look at for tomorrow. We'll see everybody in the chat room in the morning.